What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we're starting to see a small pullback from the critical resistance where we're battling the big bear, and we do have FOMC this week. Do the bulls have what it takes to defeat the bear? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we are down 0.72% as we're starting to see that pullback from the critical resistance at SPY 390. And as you can tell, we did not see any substantial pullback that broke any of the support down below. So we have no clear direction of who is going to win this battle between the bears and the bulls. Remember, the bulls need to defeat the bear by getting a decisive breakout above SPY 390. And the bears want to drive SPY back down below the support trend line, which is going to be this critical risk level down here right around 380. So as you can tell, in the short term, we do have an uptrend, but we are at very critical resistance. So the bears are going to show up and take advantage of the good risk reward ratio. So there is going to be a lot of selling pressure going through this resistance. Now, if the bulls successfully break resistance, I do expect to see some type of short squeeze rally, which could take SPY up to try to fill the gap right around SPY 408 and at least test the 200 simple moving average, which is still a negative slope. So like I always say, this is still a bear market while SPY is below 390, which means the bulls have everything to prove, and we're going to need to see the evidence. The bulls are scaring away the bear by getting that decisive price action breakout through resistance. If SPY starts losing support, which is going to be this level at 378 and 380, you instantly need to get a lot more bearish, because we could still be making another leg lower in this bear market, which we are expecting to see lower highs and lower lows until the bulls get the bullish breakout. On the NASDAQ 100 triple Qs, we were down 1.16%, and as you can tell, the triple Qs are getting their pullback from the negatively sloping 50 EMA. So relatively speaking, the NASDAQ 100 is looking a lot weaker than the S&P 500. So critical resistance for the bears all the way up here at 293, but as you can tell, the triple Qs bulls can't even break and close above 284. So watch upside resistance on the triple Qs at 282, 284, and 288. And if we break through all of that resistance, then we'll be looking for the triple Qs to battle the bear at 293. Critical downside support is going to be this level right around 272 and 267. And if we lose all of that support, which we already are losing the support trend line, we will be expecting to see a retest of the lows at 255 and possibly even another leg lower to a brand new 52-week low. As you can tell, the tech sector is still looking relatively weak, and that is why we are not getting overly bullish until the bulls prove it by getting the bullish breakout with the price action. On the Dow Jones DIA ETF, we continue to see relative strength, with the Dow Jones only pulling back 0.35% and getting the second day in a row closing back over the 200 simple moving average. So as you can tell, the Dow Jones did close 3 days above the 200 simple moving average back in August, and that did not tell us that the bear market was over. So we cannot say the bear market is ending just because the Dow Jones is back over the 200 moving average. Now, as you can tell, this is a very vertical move to the upside. So the critical risk levels in the Dow will be at 326, 324, and 319. And if we lose all of that support, we will be looking for a retest of the breakout and possibly even the gap fill right around 311 to 312. Upside resistance continues to be right around 330, 333, and this gap fill at 336. So if we do continue to push higher, you will be looking for very critical resistance at the bear market resistance trend line. On the Russell 2000 IWM ETF, we were actually up today, going up 0.09%, and we still do have a valid double bottom price target at the gap fill at 188, as long as we're above the neckline breakout at 176, which is also our critical risk level. So you can stay bullish in IWM until we break the support, because we do have a valid upside price target, and you also want to look for resistance at the trend line at 185 and the 200 moving average at 187. On the way down, if we start breaking below 178, 176, this could likely be the end of a bear market relief rally before another leg lower, but as long as we're above critical support with the double bottom breakout, you can stay on this bull. On the Arkk ETF, we were down 1.57% as Arkk continues to find resistance below this negatively sloping 50 EMA and critical resistance zone between $40 up to about 41. Above that level will be a bull breakout, which could make a run back up to resistance at 43 and then 45, with downside support at 38, 37, and 36.5. On the VIX, we were up 0.54% today, with the VIX continuing to head lower. As you can tell, we're getting rejected below a negatively sloping 5 EMA, with the price action in the VIX below all the moving averages. Now, I do expect to see the VIX eventually getting some type of dead cat bounce, which is more than likely going to give us a short-term pullback in the indices. but as you can tell, the VIX is trying to get down towards 24 in a hurry. This is still a volatile market while the VIX is above 20, so do keep that in mind. On Bitcoin, we're currently down 1.06%, and Bitcoin is still testing the breakout of that resistance level, which was 20,000, which is now acting as support, and we still have the double bottom breakout, which is likely going to take Bitcoin to at least $22,000. So you want to stay bullish as long as Bitcoin is above 20,000, and if we break the support at 20,000, it is very likely this could have been a false breakout and we could be coming back down to 19,000. And then below that, we'll be looking for the price target at 17,000. On Amazon stock, we were down 0.94% today, with Amazon continuing to close outside the lower Bollinger Band, which is continuing to expand, which is going to allow Amazon to continue falling if we lose this support at 102. Below 102, look for a retest of the low at 98. And we do have a valid price target at 88 as long as we're in this downtrend. Upside resistance will be 106 and then 113, and our resistance trend line right around 116. Microsoft stock was down 1.59% today, continuing to close below this support at 233, and as you can tell, it has not yet made a brand new 52-week low, but it could be heading in that direction if we continue to get rejected below the negatively sloping moving averages. The next support to the downside will be right around 225 and then 219, and if we start breaking out to the upside, we need to break back over 237 and then 242, with the resistance trend line right around 245. On Nvidia, we were down 2.44%, and Nvidia is holding the support, which was the resistance breakout above 134, so you can use that as a risk level to stay long for the gap fills above in the 140s. If we break below support, look for the next support at 125 and then 122. And if we lose all of that support, look for a retest of the lows at 115 to 112. On Tesla stock, we were down 0.43% today, and Tesla is still struggling to break that resistance at 230, which the bulls will need to break to get a run back up to the negatively sloping 50 EMA, which is now at 249. A strong rejection from 230 will require a breakdown below support at 222, and then we will be looking for a retest of the lows at 209 and just below 205. If we break all of that support, our next leg lower price target will be down here at 186.5. On Apple stock, we were down 1.54% today, and Apple did get a sharp rejection from that negatively sloping 200 simple moving average, which is at resistance just below 157. We're right back down to support at the breakout at 152, and if we lose that support, we still have support at 150 and 147. If we break 147, we will be looking for a retest of the lows and possibly the gap fill at 133, with a bull breakout back over 157 that should take us to 163. On the financials, we were down 0.61% as the financials are finding resistance trying to close the gap, which is right around 34.42. So if we do fill that gap, expect it to act as instant resistance. On the industrials, we were down 0.29% as the industrials are finding resistance at the negatively sloping 200 moving average, and if they break that, do look for the gap fill above. The healthcare sector was down 0.08% as they continue to push towards that resistance at 134, and they are above the 200 simple moving average, which can now act as support at 130. The energy sector was up 0.84% today, continuing to rise right above that upper resistance trend line, with the next upside price target just above at 92. So jumping back over to the S&P 500, this is going to be a very important week with FOMC, and we're right at critical resistance going into this event. So I do expect to see plenty of bears trying to show up and driving the market lower. Remember, if the bears don't succeed in driving prices lower, that will be a very impulsive short squeeze bull market breakout, and we will start looking a lot more bullish if the bulls can prove it by getting the price action above all of this critical resistance. Like I always tell you, do whatever the price action is saying, because a lot of people are doubting this rally, but if it does continue to climb higher, you are going to be on the wrong side of the trade if you ignore the price action and trend. If we lose support, we'll instantly get a lot more bearish on this market, because we are still believing this is a bear market relief rally until the bulls can prove us otherwise. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can find out more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.